Chamath Palihapitiya has seen some pretty incredible results over the last decade by proving himself to be a paragon of tech stocks during this huge bull market. Over the 2010s, he averaged a 33% return every year, blowing almost every other investor out of the water. Social Capital, his firm bet big on some pretty risky moves, including investing millions into Tesla years ago when it was on the brink of bankruptcy, and then bringing other hyper-growth companies public via a bunch of different SPACs. We don't need to wonder then why people like to listen to him, why we all quiet down when he speaks, because we know that there's going to be something valuable said. Imagine my surprise then when the SPAC king himself, the man who bet big on hyper-growth tech stocks like Tesla, announced that he is expecting that entire market to collapse in the coming years. That's what we're going to look at today. What Chamath said, why he said it, and what it means for us. But first, really quickly, if you're new to the channel, make sure to subscribe. If you enjoyed this video, then hit that like button and leave a comment for the algorithm. Also, make sure to check out our Patreon. We're building a community of investors with loads of exclusive content, including buy and sell alerts and access to my own personal portfolio. So make sure to check that out if you want to support the channel. This video was made possible by today's sponsor, BLOCKFI, a crypto earn platform that can help you earn up to 9% on stablecoins, and you can get up to $250 in free Bitcoin when you sign up with the link down below in the description.
This is where I think I kind of generally disagree with the market. I think that most people are under the impression that these are short-term kind of contractions and expansions, and that this is just a thing that needs to get worked through the system as we readjust to a post-COVID world, blah, blah, blah. I think it's different. And the reason I think it's different is if you just look at one thing and one thing only, which is that we have a massive labor shortage in America. And there's an incredible stat that I saw, which was the average hourly earnings of non-manager people in hospitality and travel. And the average salary, the mean salary was around 20 some odd dollars an hour, and it's now 33 bucks an hour. And so what that to me says is that we are going through a really sustained period where you cannot get people to do the work that needs to get done. Biden had to call the Port of LA and try to get these guys to be open 24 hours a day. The president of the United States is calling a local port, trying to get it to stay open. But why can't they stay open? Because you have longshoremen, you have all these unionized folks who will expect to get certain levels of compensation, which they deserve in order to do that work 24/7. But then all of that is going to get put through the system. And if you still have millions of jobs that needs to get done in order for the economy to function, the only efficient way that that's going to get resolved is by raising salaries. And those are consistent and persistent. Right? Those things are not just like, oh, you know what, yes, I did say 50 bucks an hour, but now I'm taking you back to 25.
Yeah, you can't take that back.
You can't do that.
That's going to be,
so that's one thing. And then second, so there's people, right? So labor capital, I just think it's getting more and more expensive to get folks to do work. And then there's the raw materials that you use to make anything. And everything that I see is that stuff is going bananas. And so I put these two things together and I'm like, I think this stuff is here to stay. I'm really kind of a little bit of a, and I had not worried. And you can see in every episode before this, I was always consistently like, there is no inflation. You can fade the inflation trade. Now I'm kind of positioning myself to hedge myself in this situation.
So first of all, I have to give some props to Chamath here for basing his opinion on data and not being consumed by the tribalism that we're seeing in finance these days. Go back 6 months and nearly everyone was saying that inflation was transitory, or if they weren't claiming it themselves, they weren't challenging others when they claimed it was transitory. Now I know that the Fed just a couple days ago actually claimed that inflation is still transitory, but to be perfectly honest, Jerome Powell is not a reliable source. And if there's one thing everyone can agree on, it's that he's been absolutely useless at best and a downright liar at worst. He's changed the definition of transitory to fit his narrative, and that's something that everyone is now aware of. Now, unlike Cathie Wood or Jerome Powell, Chamath has recognized that he was wrong. Inflation is here to stay, and the data proves that, and he's adapted his viewpoint, which is quite admirable. Now, as for the actual content of what Chamath said there, I think he's bang on right. Supply chain problems are still not going to disappear. This is one of those things that the transitory crowd told us were non-issues, that they would last for 2 or 3 months at the most before becoming distant memories, but that just hasn't been the case. The port of LA is still backed up, and it doesn't seem to be getting any better, for example. But as usual, these problems are not only in the US. Pretty much every country in the world, whether they're net importers or exporters, is experiencing the same supply side shocks. Chamath also pointed out the huge labour shortages the US is seeing, and once again, he's right. Last month, over 4 million people left the workforce in the US alone. That means they quit their jobs and they didn't bother trying to find new ones, which just so happens to mean that they don't contribute to unemployment figures. This is one of the reasons, in Chamath's opinion, that more people don't realise the extent of this problem. The unemployment figures are going down, so we think that the number of people not working is going down, but in reality, that's not the case, because unemployment figures only count people who want to be working, but aren't. What we're seeing here is more than just some people quitting their jobs. We're seeing fundamental changes to our society as millions of people change their priorities and leave the workforce. This isn't going to reverse course in a few months just because the Fed starts tapering either. It isn't going to change if the ports clear up and the supply shortages improve as well. We're seeing real demographic change right in front of our eyes. We're seeing wage growth at pretty crazy levels that isn't going to disappear over the course of a few months. Now, economists like to call this sticky inflation because once it goes up, it takes a lot of pressure to come back down. Labour is getting more and more expensive at the same time as materials and commodities are getting more and more expensive as well. Chamath's point here is that it's just no longer credible to claim that inflation is transitory. It's here, it's going to remain high, and we better get used to it.
When Druck said that, the 10-year break even was sort of, at a 5-year high at the time. We're back there now. Look, I'm just gonna. I said this on CNBC. I'll just say it again. I think it's coming. I don't think it's a short-term blip. And I think that we are in a period that will resemble the late 70s. And I think that, you kind of want to be risk off and not own risk assets. And by the way, it is hard, okay? Because we are all of us, all 4 of us, we're both risk on, and all we own are risk assets that are, it's one thing to say, let's take risk, but you could take risk in lower of all things. This is like taking risk in the most risky thing. That's what we all do.
And at a time when people have run up the valuations of private market companies to a level that just nobody can understand.
I mean, look, I think you got a year to 18 months to kind of clean this stuff up, meaning as market participants, we can shuck and jive and get everything into a decent place, but it's coming. And I hope I'm wrong, but I think we'll look back on this and we'll say we said it probably 8 to 12 months before it really reared its ugly head, but it's coming. So I just think inflation is here. I think the labor shortage is going to get worse, not better. I think we're going to have to pay people more to get out of it. I think prices are going up. Input costs are going up. Energy costs are going up. So this is it. And I think that probably the Fed and the ECB are really raising. This time next year, they're probably in a really, really tighter posture.
So we already knew that Chamath and every other credible investor right now is predicting and expecting consistent high inflation for some time. And something that often comes with high inflation is high interest rates and poor real economic growth. And that's what Chamath is predicting as well. He very clearly said that he is expecting the next few years to look like the late 1970s, which is literally called the Great Inflation. Prices rose at stupid rates and interest rates had to be raised to stupid levels to slow the economy back down. In the early 80s, interest rates were sitting at 15%, which sounds absolutely devastating to us today, and that's for good reason. Now, it is Chamath's belief that we're heading in this direction, and that causes him to believe that the stock markets are going to crash. There is not going to be a choice. Interest rates will have to be raised, and that will alter everything that we think we know about the markets today.
A stock is either a promissory note about cash today, or effectively a promissory note about cash in the future. The thing with tech stocks is we tell everybody the same thing. Your money is going to come 30 years from now because we're going to be a monopoly by then. And every dollar that I have today, I'm going to reinvest into R&D and engineering. And in an environment where interest rates are zero, you're happy to do it because you're like, well, great, these guys are investing at way better rates than zero, which is what I get from, my bank. And so I want Facebook and Google and Amazon and all these startups to be putting all this money in the ground on my behalf. But when interest rates start going up, they say, no, hold on a second. I need more money up front, less money in the future because the future becomes more uncertain. And that's the big trade-off for tech companies where they get really pummeled. By Freeberg blessing, tech stocks in the fucking toilet.
Why? Because
No
because
bueno
of
for
multiples.
tech
Because of
No
the
bueno,
multiples.
no bueno for no cash flow growth stocks. Bleh.
Yeah.
So that's the really big news here. Chamath, the tech SPAC or hypergrowth company king, thinks that these companies are going to perform badly over the next decade. When interest rates are high, these high growth tech companies won't be able to operate how they've been operating over the 2010s. They will have to accept lower valuations, which means raising less capital. They will have to accept higher interest rates, which means less leverage. They will also have to return profits to investors, which means less growth in the future. This will impact their share prices and, put very simply, they will fall. Now, I think it's important to clarify which type of companies we're actually talking about here. Google and Microsoft, for example, are both tech companies, but they are also blue chip monsters who generate huge profits, hold ridiculous market shares, and have incredible staying power. While they might take some hits to their valuations, the impact on them is basically going to be irrelevant. Now, Chamath actually went on to say in a more recent interview that he is long Microsoft and Google, while short other big tech companies that don't have the same staying power and who won't be able to perform as well during a period of stagflation. The problem stocks will be companies like Peloton, tech companies which aren't really tech companies, growth companies which are never going to grow to that $1 trillion market cap and are also never going to return huge profits either. Companies like Zoom, who have absolutely ludicrous valuations and no way to grow to that valuation in the future. Companies like Zillow, who must be the worst run company in the world, but because they operate a portion of their business online, they somehow warrant a ridiculous premium. These companies will be the first to fall, and they will fall the hardest. They will be the pets.com of the future and will personify that crash as it happens. Now, if you're new here, then consider checking out our Patreon. We're building a community of like-minded investors where we can talk and discuss all kinds of ideas just like we do on this channel. You also get access to loads of exclusive content that isn't available anywhere else. You can chat to me directly. You get early access to all videos, private live streams, and buy and sell alerts from my personal portfolio. On top of all that, once we reach 100 patrons, I'm going to hire a full-time video editor to help me put out even more content just like this. If you enjoyed this video, then make sure to subscribe. If you want to help spread the word, then consider liking the video and leaving a comment, and YouTube will do its part by pushing this video out to more people just like you. I really do appreciate all the support you give the channel, even if it's just leaving a like. There's also a link down below to my other channel in the description that you can check out as well. Finally, there's also a link down below in the description to BlockFi, where you can get up to $250 in free Bitcoin, and you can earn interest on whatever crypto you hold. Whether it's Bitcoin, Ether, or even stablecoins, you can earn as much as 9% interest a year. I personally hold about $15,000 on BlockFi in the form of stablecoins, which allows me to earn 9% interest while still being able to access that cash if there's a market downturn. But I don't have to put up with the measly 0.1% returns that I'd get on a savings account. So if that sounds interesting to you, then make sure to check BlockFi out. Thanks for all the support, thanks for watching, stay stoic, until next time.